High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, welcome to our live trading webinar workshop today. So we got a lot in store for you today. So what do we have? Those of you joining in live, welcome. So the three main format that we follow is we first look at some live trading positions. I just took a look at some of them just now. I'll be going through that. We got a rush on that one there. And then after that, we will look at a topic. The topic for today is how to trade a gap up and gap down strategy. It's quite popular. And then finally, we will finish off with some Q&A as well. Right, so let me just, without further ado, so that's what we got for you, that and more in this live trading session. So let's go on forward swiftly to looking at the charts. So let's take a look. I was taking a look at GBP/USD that was aligning just now. For those of you joining in live, it's still up on here. Founder of MasterTheMarkets Illustrates Conference and the Traders Open Day. Okay, so we are going to now take a look at the cable. So we got the daily aligning, the 4-hour aligning. Those of you who can't understand the terminologies for now, don't worry too much about it. I'll go through it later and give you some reference videos. And the 15-minute is on the upside as well. And the 1 hour just confirmed over here. So this is where we are at, and the lower stretch has been taken out and the upper stretch as well. So this is a good setup what we got here. I'm just going to take a look at this ATR 64. The range is bingo. So far so good. It will be best, traders, if we get a confirmation high here on the 15-minute, but I think the 1 hour might carry this through, to be honest. So what I'm going to be doing, I will do this for now. So we will put a pending order for 3368. So let me just do that very quickly, right? So let me just do that. And then we'll take a look at other ones as well. So I'll do a buy stop order. I'll do it for the high of that 3368. Give it 1 pip leeway, 6970, 1.3370. I'll explain all of this in a minute. I just want to just move on it so that we don't miss on this one here. 3370. Then in terms of the ATR 17, isn't it? In terms of the MAE, and I've got to check the volume on this as well. So let me just quickly do that. Let me see that one there. Quite a hectic day today we got. Got a lecture to give at the STA later on today evening on automated trading systems. So just got a little bit of prep for that one as well. So let's see what trades we get for today. I'm going to make it a shorter one today. Let me see. So here on the 15 minutes. So let's take a look. And if I did it on the 1 hour here, I just want to quickly take a look at the MAE data. That's good. I've got the MAE data here. Even if I did for phase ones, that's fine. It will be the same. I'm taking a look at, it says 2 ATR, isn't it? And let me do the pip version of that as well. For stocks, you can use the percentage. Just had a session with my mentor the other day. That's what he suggested as well. Anyway, coming back to here, let's take a look. It's crunching that data. There we go. So 25 and 50. So what I'll do, I will increase that by 5. Those of you, if this is a little bit above your head, just hang in there. I'll explain all of this later. I'm going to take a look at the other instruments as well. 25 to 40. Okay, good. So I've got all of that. So I will take maybe 40 there. So let's do this together then, traders. So we've got still a bit of breather time because it's going to the downside. So let's do this together. It's good learning for you guys also. So in terms of 2 ATR, that's about 34, whereas this one is about 40, isn't it? Let me go with 2 ATR then. So ATR, I'm reading it from here, right? Those of you who don't know ATR and the risk management we're doing, please do look at our Trader Starter Pack video series. That will really help you. 2 times 1734. So close, a double 366. Let me bring my calculator here. Right, so let me quickly do that together with you guys. So on the close, 3366, right, minus 34, yeah, is what we are looking for. And the 34, 33, 32, okay, 33, 32 is where we're going to place our stop loss. And we know that according to these stats, we won't get stopped out 98% of the time, okay, before it gets to the target. Okay, so that's around there is what we got. The entry is going to be around here, right, 33.70. Just a bit above the high is what I'm going to put it at. Right, and with a spread of about 1, isn't it? Trade Nation is quite good in that. The spreads are a bit tight. 133.69 is what we are saying, isn't it, traders? So 68, 69, 33.70. I would just 69 is okay, I think, with the tight stop that they have over there, the tight spread, sorry. And then the target, I'm just going to add the low, 33.22. So I'm just going to do 1 ATR here, which is about 17, or we can go for the range. Let me just do that. We'll put both the targets just like what we did last time. So ATR is about 81, so I'm looking at about 64 here. So one target is from 33.66 plus 17, 33.83 is what I got. And the other one, traders, I've got the low of today, 33.22. This is towards making the range, 33.22 plus 64, 33.86. So it's very near to our 1 ATR target in any case, right? So they're both very near. So what I will do is I will just go for the 1 ATR for now. 33.20 stop loss. Sorry, I think I got that one wrong. 3332, isn't it? Just couldn't see that one properly. And then I will go for the 1.3383. So let's just double check. We got everything. 3383. Okay. So there we go. That's our resting order over there. What I will also do, traders, I'll put this for you guys on the Signal DP, on the Signal to your Telegram channel. Those of you who haven't joined the Telegram channel, you can do that. I'll do that for you guys. This is going to be through, thanks for Trade Nation, because we're working together in collaboration with Trade Nation. So this signal goes out through what they have designed to the Telegram channel. So I'll do that right now. So what I will do is I'll copy this over to here on GBP USD, okay, on the signal here. So we're looking to buy. Just bear with me a little bit as I do this thing here. So come back to here. Now here, I'll just do that, and then you guys should be able to get the signal as it is. And those of you who got a Trade Nation account, it will pre-fill the order for you on your trade ticket, okay? And 33.83, okay? So that's what we got on here. In fact, can I be a bit bolder here? 33, what do we actually have? 69, isn't it? The close is 33.66. Right. I think I'll go for the close again. I think 68, I'll do it. Let me just change it on here as well. There we go, guys. You guys should get that. I'll turn that over. Let me see if I can get it. Not sure if I will be able to get it in time. I might have just missed it a little bit. There we go. Still got that in. Yeah, so we'll get that. We'll see how that one goes. Just going to quickly double check with the volume. I just checked it before. Volume is designed by the trade guider and the team. So let me just show you here. So that's Gavin Holmes and his team. I know we go live with Gavin Holmes on Thursday, trade guider and the team. Designed by the late Tom Williams, actually, the VSC. So it goes a long way with that. I'm taking a look at the VSA light indicator here. So that is a bit on the gray side at the moment. Now, that's okay still. And in terms of volume, I'm not really getting a very good textbook example on that. So I might have a little bit of a bumpy ride on this one here. But we are having a little bit of a volume coming on the downside on this seller bar, where the strength has come back in on towards touching the third relative moving average and the second one. So far so good, as it's correlating with everything on this. And let me just quickly just check on the 15 minutes. Sometimes a bit more obvious there. Here, I can see that too over here as well. On there, not really great, amazing volume back. So it might have a little bit of a bumpy ride on this one. So let's wait and see how that one goes. Let me put this one here. And let me just do a diagrammatic representation where everything is 33, 30, isn't it? 30. Just quickly just get that one down. 33, 32 is what we got, right? 33, 32 is where our stop should be. I've just changed that on the signal, so you guys should get it as well. So we got all of that locked in, and 33.83 on spam. We just want to get this right properly. I don't know why I did that on there. Yeah, that should come true as well for you guys. Good. I think everything is matching now. And yeah, 33, 32. So let me just put that onto here as well. on the here, 33, 32, and here. And then let's take a look at a few more instruments. Let's see if it's a bit more straightforward on the other ones, and then I will start to explain what we are actually doing here. Let's see. Okay, good. So I've got all of that. So you can see that here, entry, stop, target. Now don't get a bit frightened that the stop is a bit too far on this one. This is just giving it enough room to move. As you have seen in all our previous trades that we have taken, that this room that we give is for the volatility, okay, for it to dance around, if you want to call it that way, before it moves towards our target. So all these things will never appear on your actual profit and loss, okay. Yes, some of them will hit it. That's only about 5% of them, but there are ways that we can minimize the risk. But for those of you who want to get an idea of how past trades we've taken, you can definitely go to our youtube.com/masterthemarkets. Another one which I said, which I'll come to a bit more in detail, but if you want to just get an idea of how we're doing this framework and getting the conviction, what you do is you can go to 7steps to ctp.com. Those of you especially joining us for the first time, put name, email, and number if you want to get live trading updates, and also if you want to know when we go live as well. And then click on Not a Robot, get free instant access. And then after that, you will get the 7 videos sent to your inbox, and you can watch that in your own free time. A lot of years of research have gone into this, so it will definitely help you. I highly recommend it, okay? These are the things that really got us very well known in the industry. Also being invited by the STA, the Society of Technical Analysis, to come and lecture for them, to do a talk first, and then now today I'm going to be lecturing for their diploma students as well, okay? Good. So that one there, now coming back into here. So let me go back into here again. So now, let me take a look at other instruments at the moment. Uptrend here, but we are having it on the downside. That is a bit gone on here, so I don't think we'll get any trigger. Gold could be. Let me just take a look very quickly on gold. It's a bit overextended here on the 4-hour. That's my only concern. And the 1-hour, it's boxed up here. Let me see, 15 minutes. Will I get something? Yeah, we did get something here, but it's boxing up. It's consolidating today. Here, Brent is on the downside. A bit of the stretch ratio is not really looking good for me. Let me see on the 4-hour. From a swing perspective, that's on the upside. That's not looking very good. If I were to trade it, it's just towards today's bar, but not with all alignment, right? So I think we will leave this also. Also, the upper looks like the upper stretch got taken up today, isn't it? Yeah, upper stretch. So it's forming a different type of bar for today. That's not the best one, what we want. Silver, what do I have at the moment? Again, towards the downside, single market compression there. Let me see, on the uptrend here. Let me see, probably highly going to confirm that top. Still on the uptrend here. Let me check the stretch. Just bear with me a moment as I go through this. This is a downtrend. This is okay, not the best of setups. Let me check again on the daily. This is good for today. My only concern is what is the bar range? 46 cents, 66. No, it's almost formed it, isn't it? 80%. That's okay. Coming back to euro dollar, uptrend, similar thing on just like GBP USD. Yeah, just like GBP USD is doing this, isn't it? We can double up, but just only currencies. I think our cable did get triggered just now. Let me just take a look very quickly on this. Daily, 4-hour. And then 1 hour, 4 hour, what is it doing? It's on the upside as well. Just confirmed 1 hour, and then 15-minute is towards the downtrend. It just took that out. If this does confirm, we could get a good trade here. We will keep an eye out on that one. And I will just take a look at the daily. This is another one, isn't it? 80, no, 70, 56, 53. So it is to do its range. So I'll keep an eye on this. Looks like our cable trade has triggered. Okay, so we are live on this trade at the moment. A little bit just near to break even at the moment. That's fine. We'll wait and see how we perform on that. Now, as I promised, okay, so let me just explain this as this trade is going on over here as we keep an eye on this one here. We are writing this on the 1 hour ATR, isn't it, traders, right? So wait and see how that one carries on. And towards the range as well. So we're coming out a bit earlier rather than taking out even previous bars high. So what is the whole rationale behind this? So as you all know, the famous trend alignment tables, don't worry too much about other spreadsheets. I had to open it because for the lecture later on today. Right. So we got an uptrend phase one. So this is your trend alignment tables. This is also on our YouTube channel as well. So definitely go and take a look at that. So on cable, what I got at the moment, if you see, we got, let me go on to the daily, right? So what we got here, if you take a look, so we got an uptrend phase one, okay? The reason why we are confident on the trend is that we have quantified what a top and a bottom is, okay? That's the first step for a quantified structured framework, okay? For a quantified structured framework. This is what we're looking for. Now, a lot of people will tell you that they're swing traders, but the most important essence of a swing is what? Is a bottom and a top quantification. Because if you don't have that, then it just becomes guesswork, okay? So for example, I usually show this over here. So if I switch off the SMI Elite OE, then what happens then, traders, right? Then it becomes guesswork, isn't it? Some people in 10,000 people that I show this to, some will say that's a top, some might say no, that, this one is a bottom, some will say no, right? Some will say this is a top, some will say no. So the whole thing becomes a guesswork, okay? And you can't do that. And it really alarms me because some people will say, oh yeah, you know, it's a downtrend because there's two red bars, you know, that's a downtrend. No, that's appalling. That's not how you define a trend, right? So we go through all of that very systematically on 7 steps to CTP. So definitely check that out. So, but once I put that in, so the first step, what the quant traders did was to quantify what a top and a bottom is. That's what we have, and the formulas that they passed on to us, really. Incredible geniuses, by the way. So that's what we have over here. So we got, it just confirmed yesterday, and we had signals going out to all our clients on the swing strategies, more longer term, more end of day as well. Okay, but on the intraday today, all I got is an uptrend phase one, because when I connect all these tops and bottoms together, I will start to see a uptrend phase one at the moment. Okay, you can see that phase one means what? In alignment with the trend. Okay, in alignment with the trend, the bottom to top move. Okay, this one is your counter trend move, your phase two. Okay, and this one is phase one. So it just reverts back again, phase one, phase two, then back to phase one again, then phase two, so on and so forth, right until the trend changes. So that's on the daily. On the 4 hour, I'm again having an uptrend, but here, however, I'm having a phase two. This bottom hasn't been confirmed yet, right? So according to our structure, this is an uptrend phase two. So let me come back to here again. So this one I wouldn't say is low OE. The last time we did it, there was. So here now it's an uptrend phase two. So let's move on. On the 1 hour, you can see over here, on the 1 hour, you can see that again, this is an uptrend phase one. So you can see the idea, the premise of quantifying what a top and a bottom is. Then you got now the uptrend phase 1 as well. Took out the last high. This is all coded in our trend, in our indicator. Okay, so that tells you everything there. So that's uptrend phase 1 as well. Okay, so I will update this one here. Let me do that together with you. And then we got the 15-minute. Okay, now on the 15-minute, now here's something that you all can see together with me. You see over here, right? What you can see is over here, it was an uptrend, right? Then it took out that low, became a downtrend. Now it did what we call a variation 6, where it took out that high and then is reverted back to an uptrend once again. My only caution is that, look at this, right? Where the confirmation came, it's quite a little bit overextended from here. This is why it probably highly will consolidate a little bit or even confirm a top and then move up to the its 1 ATR range on the 1 hour. So this is why we give it room to move for the volatility, because that's how cycles move, right? Because if it just moves, keeps moving in a straight line, then I guess it'll be very easy to make money in the markets, isn't it, traders, right? So the market moves in cycles and never moves in a straight line. All of you do know that, right? So that's why we correlate all the different time frames and the cycles and where is it in terms of its cycle at the moment, okay? So this is how we are looking at it. So let me just put this over here. So over here, it's uptrend phase 1. Then I would say it's a medium OE, okay? Right? Open equity left, medium move left, okay? So that's that one over there. Now, in terms of the stretch, all right, so let's go and take a look at the stretch over here. So on the stretch, it's taken out both, okay? The latest one being the upside, okay? So it's taken out both, the latest one being the upside. So that's what we got over here, right? So I would say on the up, this one here. And then finally, 50% OE will be 1 ATR, which I've taken from the 1 hour. And then the ATR range hasn't been formed. The bias is towards the long side. So that's how you can fill out the table as well. Some of you are members of us, you already got the table. A simple table, isn't it? You can always do that. And use your own trend alignment if you have, or you can always get in contact with us to get the smart money indicator if you do want, if you think it'll be much more easier for you guys. And I totally believe in that, because whenever people have used it in any strategy that they do, they just get more clearer. Now, in terms of how do we form our bias, so you can see there's two parts, okay? One is trend alignment, one is direction alignment, right? So trend alignment wise, very simple, all across 4 time frames. Uptrend, you don't get that all the time. If you look at all our previous videos, you won't get that all the time. Direction alignment, at least 3 time frames. Uptrend phase 1, 15-minute, uptrend phase 1. Only 4 hour is not aligning, but at least the trend is aligning. So that's how we get that. And then the stretch along with that as well, we see the upper stretch being taken out and the range being not formed. So I'm expecting the bigger range from open to form to the upside. I don't have much time to explain every single terminology on the stretch, on the BRO, on the volume, on the OE numbers and all that. So I would give 2 reference points, as I said just now, for you guys to look at after this, is that take a look at 7stepstoctp.com, right? As I said, after you put your details, once you click that button, look through this. This will be the first step, I would say. Second step is, after you've understood the framework, remember this is a framework, right? The smart money indicator is not a buy and sell indicator. After you've understood the framework, then look at some practical examples here. So over the practical examples here, you can go under the live section, right? And under the live section, then you can look through all the different trades that we have taken whenever we have gone live, okay? Those are the most important ones. Now, one reference video I can definitely give you is the trend alignment tables. So this one here. So this one you can take a look at as well. We have talked quite extensively on how we do the tables and everything. And then the other ones, there's lots of quality material here. You can go on the homepage under the must watch as well section. Okay. And a lot of them, you know, if you see, it's not always been, of course, it's not always a straight road up, right? whenever we place a trade. Some of them do, but very less percentage. But some of them, if you look, there was one which will come to our stop loss very, very close. One was the DAX. I think it might have been here somewhere. But the one I remember was the gold trade, you know. This was our most recent one, where cable hit both the targets, took it along with Trade Guider on Thursday when we go live with them. Tomorrow we're meeting Gavin in person. So we're doing another one in person, and we will online stream it as well. The other one, look at this. This is a crazy one. Gold came close to stopping us out. You can definitely take a look at that as well. Okay, good. So I've given you enough reference videos. I just remembered the other thing is those of you who have subscribed but thinking, you know what, why am I not getting notifications, right, onto my phone? What you have to do is click on the all button icon. Okay, that is the important one. Okay, so that is what you got to be taking a look at. Right, so we got all that said over there. Just keeping an eye. That is a little bit dancing around here. That's fine. I mean, we've seen that too many times. Those of you who've joined us live, you understand that. This is what we call the volatility, the maximum adverse excursion. How much does it go against you before going to your target? Okay, that's what we are looking at. So I will keep an eye on this. And those of you on the Telegram channel, we will update this and also tell you how to trail your stop as well. So over here, what you got to do is another thing which I said, remember before I got into this trade, I did mention to you guys that because this is a bit overextended, it might confirm its top before going to the target. Those of you who want to come in a bit later and with a tighter stop, you can wait for this top to confirm, retrace a little bit, and then after that you get the blue dot, then you can come in. We will keep an eye on that. If it does do that, we will probably scale in as well on this position. Okay, so we'll wait and see how that turns out to be. Okay, good. So that swiftly brings me to our topic for today on the gap up and down. I did take a quick look at Dow Jones today. Yeah, BRO is to the upside, 4 hour, and this one here. Let me just see. What do we actually have on this one here? Right, it's still a downtrend as well. Yeah, it's not really the best alignment. Yeah, I'll leave that. I mean, you guys can look at that later on as well and see if that fits with the rules. But I've also mentioned in our previous ones on what really is the edge of this strategy, what I've just we have constructed, okay? And you must always know the edge of your strategy, why it must continue to make it work. Right, so here's a good example here on today's topic, right? So how to trade a gap up and gap down strategy. Okay, how to trade a gap up and gap down strategy. So how do you do that? First of all, of course, the first thing is you need a gap. So this strategy, the concept of this strategy is that the gap has got to fill up. Okay, the gap has got to fill up. That's the whole premise of that. Okay. Now, then you got to go deeper. Now, you see, this is the most important thing which we have found over time of testing many, many strategies and systems, okay? The first thing you have to understand, traders, is that before you even start to put the rules up, okay, you first have to really validate your concept, okay, the concept of the strategy. And the main thing of validation is you have to ask yourself, why will it keep recurring in the market? Okay, will keep recurring. This will give you a conviction to put the rules together, right? So for example, if you're building a car, if you have the conviction, you've got the stats that there are a lot of families where you are living, okay, 90% of them are all families, then of course, this will give you the conviction to build a family car, right? That's the premise. The same thing over here. Another example I can give you is over here, our premise is that it will form a range every day, okay, for the first strategy that I showed you, right? Based on the stretch and the trend alignment and all that. And then we are looking to capture that range every single day. Because if it didn't do any range, it will become a flat horizontal line, isn't it not, traders, right? So you see, that's why we get this vertical bars forming the range. But that's a very strong one. That's a very strong concept to say that why it will keep recurring. So in the gap up and down strategy, what we are taking a look at over here, in the gap up and down, why? Why should it keep recurring again and again? The reason is when something gaps up, okay? When something gaps up, just like this, right? Yesterday's open was here, but the next open of this bar was here, right? So that's a gap up, right? The next one opens up like that. It's a gap, right? Now, why does it gap? Because there were other orders that wanted to buy this, which showed a bit of strength, right? Right, which shows a bit of strength. And then what happens? There are orders not filled in the market. So there are orders unfulfilled, okay? Orders unfulfilled. So the whole premise of this strategy is that will the price come back down to fill those orders? That is the whole premise of this, right? Will the orders come back to will the price come back to fill those orders? And highly probably they will, unless you got a runaway market. Unless you got a runaway market where the orders don't get fulfilled and it just keeps going up. Then you need to validate the percentage of time that happens and the percentage of time that the orders which are unfulfilled because of the gap will get fulfilled. Once you got that validative stats, that's your first homework. What you got to do? You got to validate that by data. The concept is fine, but you've got to validate it with data right now. Okay. Once you go an edge like that, hey, you know what? 80% of them will cover the gap. Okay. Then that's fine. But of course, also depends on your entry. That's why when you do your data sample, you always need to have the first thing you need to have is the numerator in maths, as we call it, the data that has fulfilled your criteria of your question over the total sample, okay, that you have, right? So all that you got to go through. So that's the first thing you got to do based on how you want to enter, which will validate your entry point, okay? So that's the first thing. Now, as we have seen most of the time, it does fill the thing, okay? But there'll be some that won't. But before you jump into the trade that you think that it will fill, in this case, it did fill it, right? It came back down to fill the gap because there were orders that were unfulfilled. Now, why should it come to fill up that orders that were unfulfilled? Why should it do that, right? Why should the market do that? Because the premise for that, behind it, logically, is that because they're unfulfilled orders, and if I can fill them up, who benefits, right? Nothing in that market is going to move for a free lunch, isn't it? There are people who are moving it, right? And they all want to make money. And the main thing is because the brokers want to fill that up to make their commissions, and that's what will facilitate that move. Your skill is to find out how will it get to the filling of the gap, right? And when should you get in? A little bit of timing, right? You don't want to get in straight away and then see a runaway market or wait until this top forms before it comes back down, okay? So then how would you then trade it? So first thing I always say, concept, validate it with stats, get absolutely behind it, get convinced that it's a recurring principle and you got an edge. After you have done that, then go on to formulating your 5 components of your strategy, right? Which I always talk about: your entry, your stop loss, and in stop loss, you got your ISL, you got your TSL, then you got your target, then after you got your risk management, okay? So all that, even in target, you can split it down into about 2 parts. Now, after all of that, one tip I can give you towards the timing, you can use what we're doing over here as well in terms of the stretch principle, the BRO, and the range, and all of that, right? So for example, today, if I see that the Brent oil is gapped up, and then it will highly probably fill the gap down, what I do, I'll show that to you in real time. So what I can do is, let me leave that one there. I go down to my lower time frames. I will have, right? So I go into my lower time frames. I can see this is an uptrend phase one, but it's a bit overextended. Fair enough. On the 4 hour, highly probably it can turn around, which is in alignment with me filling the gap to the downside. And then the other thing I look at, you see, when I get the Q on the 15-minute with this one here, then I can put my targets accordingly, either towards the range or towards the ATR, okay, on the 15-minute time frame. And then the 1 hour, of course, I double check as well. And I'll double check the stretch as well. And then this is a good textbook example of it also aligning with the VSA light red dot as well, closing below, and some volume spikes happening. Now over here, I can see also, if I go to here, having a little bit of dance, if you want to call it, a stagnation over there on cable. So wait on that one in a minute. And if I go back to Brent on the 1 hour, you can see over here. So let me hide that here. You see, it's taken out the lower stretch, right? And then it's also a downtrend with this bar. But you see now it's aligning with everything with your strategy, okay? So that's one of the things that you can do. So you can fit in that with along with the gap principle, but you don't get in until you get alignment of all your parameters to increase your probability of it filling the gap to your direction, which is in this Brent oil is towards the downside. Okay, so that's what we would do. And then finally, then the third thing which you always got to do is then you got to monitor it right in real time. And then of course know your drawdowns, do a little bit of back testing on it as well, validate it, and then move with confidence and then do forward testing, monitor it. And then always the most important thing as professionals, we always look at only the risk only. Everything will, the upside looks after itself. Okay. So these are the things what I would say, the vice versa will be for the gap up. Okay. So that's what I would say in terms of a gap up and down strategy. I know some of the stocks did do that. I did see Microsoft do that as well on the other day, and that's things that you guys can take a look at as well. Okay. Okay, good. So in terms of coming back, so that's on the topic for today, gap up and down. So I told you what the gap up is, validate your concept, right? The second thing is write down the rules towards timing, right? And direction, which you will get from the gap. And then the third thing is then monitoring of it, okay? And optimization if necessary along the time. These are the general rules on constructing trading systems and strategies. Okay, good traders. So that's that one there. After that, let's see. So now coming back to here, let me just take a look on how cable is doing. As I said, it is looking to confirm the top on the 15-minute. Okay, so we'll see how that one comes across. Let me seeing a little bit of a volume spike over here, and then of course we'll see how the next bar then closes. Okay, so this is the thing. So those of you who are not entered, you can wait. If you're on a conservative approach, wait for the top to confirm, and then after that the bottom, and then you can get in. But of course, if you do that, remember that there's no entry that is the perfect one. With doing that, of course, there'll be some that you will miss. Okay, but the best side of that is your risk is a bit more tighter. Okay, that's what we are looking at. Good. I think that's pretty much. Let me see if there are any questions that are coming up. I think the main one that is there is how do you get your ATR target? How do you know where to exit? Now the thing is, because we have quantified what a bottom and a top is, and I've got the framework. So what happens is, traders, to give you a very quick answer, but 7 steps to CTP will tell you the whole thing. So on that, how they'll tell you the ATR is what you guys are asking, isn't it? So let me do that one there. I'll just do one ATR for now. And you can do this across any instrument, right? So that's the best thing I like about TradingView. Let's take a look at here. I need to change the comparison sign. There we go. So just to give you a brief idea of what this has done, okay, just to give you a simple idea of what we've done here. So you can see that we've quantified what the top and the bottom is, and then you can start to see. So then what we then did is, as per the quant framework, we then kept measuring how much it travels in each swing distance from the starting point A to B, point of entry to maximum point reached. Okay, that's what we kept doing. So you can see some of them travel quite a bit. 2.1, this 0.4, 0.8, 0.25, so on, so forth. 1.85 ATR and so on, so forth. Okay. If I want to do it in pips, I can do that as well. Okay. So now, once I've done that, then I consolidate that all onto the table over here. Okay. So let me see over here. So I consolidate that all onto this table here. And when I consolidate it, you can see I'm having 2,250 swings on the 15-minute time frame on GBP USD. Over how many years am I doing it? Since 2010. So for a very long period, over 15 years. You got to be careful of this as well. Make sure that the broker does offer that data for that amount of time. So if you don't know, then you can always double check it. And then after that, you can see that for 0.25 ATR, it gets there 85% of the time. All this is doing is because I've measured each swing distance from before, this gives me a realistic expectation when I take it for the future, going forward on the right-hand side of the chart in real time, okay? This is what gives us the conviction. Now, over here, you can see that the 1 ATR is about 58.18% of the time, okay? But of course, this is without any parameters, just by looking at the data only. But of course, when I put in all the rest, right, trend alignment, direction alignment, stretch, and all of that, this probability will shoot up. Now, one more recent advancement that we had, and one of our clients who joined us actually did this for us actually. So you can see that the community itself uplifts the community, which is when we know we're going in the right direction in terms of product and development. You can see that here, I can just choose phase ones, just along with trend alignments. So now this entire table will just only tell me just for phase ones only. You see immediately the total number is reduced because it's taken away phase two and compressions. Those of you who are clients of ours, you can definitely get this. Just contact us at client service at Master the Markets, and we will put that onto your screens. And then after that, you can see immediately 0.25 ATR is bumped up another 10%. 1 ATR, look at that, near to 68% of the time. So at the moment, this is a phase one here at the 15-minute. So we will see, and then I'm taking it in alignment with the 1 hour time frame because I have the 1 hour kick in over here, all right, with that confirmation over here. And there we go. With 1 ATR, we'll get there 65% of the time. Now, how do we increase that? That's why we are aligning all the other things, the trend alignment, direction alignment, stretch, volume, all of those things what we are doing. Okay, traders? Okay, good. So I think that gives you a good idea. The last things on reference points. You see, the most important thing I'll tell you is what scares the hell out of people, rather, even if it's in trading or investment, is when you immediately get a seller bar like that. What should give you the conviction? When you understand your framework, when you understand your volatility, where you should get out in terms of your open equity, which I just showed you, all of that will increase your conviction. This is why when we even trade live, and you've seen it, when we take losses, even when we take wins and all of that, I always say it's not about it winning or losing. The most important thing is you must understand the logic of your system and why it must continue to work, okay, in real time. This is the most important thing. Right, traders. So that's that one there. What I would say now is a wrap up. I know some of you are asking for the reference. I answered the questions on open equity, hopefully, on that. In terms of a wrap up reference materials, for those of you joining us first live, 7 steps to CTP. Once you put your contact details, click on the robot, click on the green button, check the videos at your own free time. Highly recommend it. Will go along with any strategy that you are doing. So very, very important. And it will help you understand the entire framework, will help you in anything that you do, because the way we teach and the way we put over the framework is based on cross-transferable principles, okay? Our YouTube channel as well, so that you can catch us live anytime and not miss anything where we go live with also other traders as well. We had the really good privilege of also interviewing the market wizard Tom Basso as well. So a lot of good content and material over here that you can see, that you can watch at your own free time. www.youtube.com/masterthemarkets. And then once you click on subscribe and hit the all bell icon, then you're all good. And anytime we go online, you'll be able to see that. Okay. So those are the things, and the Telegram channel. That's right. So the Telegram channel, you can join that. There will be a link also on the YouTube chat. And then once you got that, you can also get the signals right to your phone, and we are all doing it in collaboration with Trade Nation. Okay, really great. Guys, really look after you as well. Really great customer service support. Traders, I guess that's pretty much that from me. I'm just going to keep an eye on the GBP USD and see how that comes across. I will keep you all posted on the Telegram channel on whether it gets to our target or how do we trail it and all of that. So keep in tune with that. If there's nothing else, I think we've covered quite a lot today. We looked at some live trading positions, right? Potential trades. This was the one that fit all the box in on GPUSD. We've taken on others before as well, as you have seen gold, DAX, oil, and all of that. All this we're teaching you will come across in any instrument. You can cross transfer it. The other thing is we cover the topic for today, gap up and down, right? Strategy, how you do that. And then finally, then we answer some questions on the OE. Traders, I guess that's a wrap up from me. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.